So wonderful. You can see that they're almost setting us up for some sort of big, horrendous blah. If anything, what I think probably happens here is we have the market is really, really soft into that options expiry event. And then we waffle, 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 maybe counter trend rally into that 2021st. Maybe if anything, it'll be interesting to see whether they can take the market up on an up note or a down note into that options expiry. And then if they rally the market into the Fed, then that's a bad sign because on the other side of it, and you guys all got a really good lesson in that a week or so ago, where this market was trying to work its way up. And it was exactly at this moment right here that Powell came out in Jackson Hole and said, we're going to shit on the world. And then boom, the whole market just tanked on that event. You can see that big honking wick. So there was a really good example of buy the rumor. And then he came out and spoke. And then, oh my God, the whole market just puked out the other side of it. So I think that's what happens into our FOMC coming up here is I think the market's going to be relatively weak into that options expiry. Then it's going to enjoy a bit of a dead cat bounce into that Fed event. Then he's going to come out and probably like 21st, 22nd, kind of, that's when you see the market react to what he said. And then boom, we head right back down into the soup. I think that sort of aligns with that image I was trying to show you there a second ago. This right here. So there's 16th. Maybe that's the 16th. Maybe we flounder around here with the Fed. It looks like into the end of the month, things look relatively okay. So I get the feeling Fed's going to meet. We're going to have like a knee-jerk dump following, just like I showed you just there after Powell spoke. But that's probably a bit of a trap. And they snap the market back, go after these stops. It'd be really interesting to see if Willie stupidly oversold down in here. But the point here is you can see they're just messing around with these old lows. Then heading into October, they'll be like, okay, the lows held. It's a new bull market. And I think there's one more big FU into the October options expiry. And then also, too, this is all about the U.S. election. And I did talk a little bit about this in the free video on that Rumble, but I also talked a bit about this in Friday's daily brief. I think there's actually two bearish chart patterns working on this chart. The first one is fairly large. It's basically this as an AEB. And then if you clone that, CD, this takes us down into these levels. So you can see a higher time frame, 88.6, higher time frame bought target, higher time frame 2.618 Foggenbaum. There's a couple 877 Foggenbaums down here as well. I think there's a very high probability that we have to trade down into this area. I also like this area as a cost of production. That to me resonates. Maybe we get some stab. The guy that I was speaking to this morning, one time in the past, he threw in a whole bunch of really stinky bids on one of these Bitcoin exchanges, and he got absolute gift fills because the market just absolutely tanked. If I understand correctly, there's a whole bunch of Mt. Gox coins that are coming free. So you might find that there's a whole bunch of people that are just going to be knee-jerk selling those coins as they hit the public. I don't know what the fundamental driver is. It might be Mr. SEC guy. He drops the hammer on crypto or something along those lines. I mean, I'm not going to get into the business of predicting the future. All I'm going to say is I do have some pretty good technical targets down in this area. And I like this as sort of our ultimate base for Bitcoin. There's that 2.618, some 877s. That's the bought target. And that's an 88.6 off of the whole range. And we love 88.6 tags. We can throw up the S19s, S17s, S21s, cost of mining rigs. They're also down in this area too. So I like that as sort of a fundamental driver for price to get down. Remember we said institutions buy down markets. So as we come into these levels that Simon Dixon says, this is a no-brainer. This is when you're supposed to be buying Bitcoins. Of course, what a surprise. We're going to have all those Mt. Gox coins coming onto the market. Anybody who's still in there and finally wants to get released, they're going to be selling into those weak prices. And frankly speaking, I think that's a mistake. And the guy that I was speaking to this morning, I said, if you can somehow take those coins off. Hey, you've just sat there for 8 years waiting. Why can't you wait just a couple more years? At the very least, maybe wait for the next halving event, and we're back into the orgy mode in Bitcoin, and then start selling. I mean, what's another year or two? We all know, another sort of aside, and actually this is the real reason why I brought the blog up to begin with, but we all know, and maybe if you don't, maybe you should school yourself. We all know that, let's see, there it is, that 2022, 2023 is a time for the markets. This is the Benner cycle. This was written, 200 years ago. And he forecasted that 2022, 2023, the market actually troughs in 2023.